Analysts at Parthian Partners say that the level of inflows in Nigeria's fixed income market has not been significant due to the tight liquidity. However, they expect some respite in September as about 300 billion naira in coupon payments and OMO maturities are expected in the market. And I have Ronke Akinyemi, Assistant Vice President and Global Markets at Parthian Partners. She joins me now for this discussion. Thank you so much for your time today, Ronke. But let's first look at the sentiments that we're seeing driving activity in the markets today. We've seen quite a lot play out this week with the Treasury bills primary market auction and also the current interest rate environment.
Thank you for having me. So yesterday there was the NTB auction which closed higher. The 91 days and the 182 days closed like about 50 basis points higher, while the 364 days moved from 7.45 to 8.5%. So going into today, we've seen like bearish sentiments. The special bills are still taking the center stage, but we've also seen like a little bit of sell-offs on the 1 year. In the bond market, it was primarily mixed today with slightly bullish sentiments, given that we saw coupon payments a few days ago on the 28th.
But when you look at the primary market, the T-bills auction yesterday, how would you say it compares with the previous ones we've seen?
So we saw the most offering yesterday compared to the rest of the quarter, and although it was still oversubscribed, we saw that demand was skewed to the long end, and we have seen interest rates go higher. Most likely because we've seen higher interest rates on savings accounts and better yields on bank placements. So investors are starting to demand higher yields from the federal government.
In terms of players participating in the market, we're still seeing the PFAs continue to dominate activity here. But what can we do to attract more FPIs in the market?
Honestly, we have seen like activities of the FPIs decline in the market over the last few years. The PFAs have been the major drivers of markets in recent times. And I would like to add that they are primarily active in the primary space, given that, they get to find better yields at the auction. They also get to keep their auction commission, as well as, bypass the new regulatory charge that was brought in at the beginning of the year. So we've primarily seen them play in the primary market space.
Yeah, but in terms of yield curve activity, where are we seeing more activity play out?
Mostly on the mid to long end. The 42s, we've seen it hit bids of 14.25, while the 45s, 49s, and 50s are slightly lower. And this is on the back of the bond auction last week, which closed at 14% on the long end.
All right, and did we get that OMO auction today?
No. That was not today.
All right, then let's get into the liquidity, more or less what you expect to play out in that. I understand there's some FAC inflows coming in.
Yes, I think about 950 billion is expected in FAC inflows. Should come in towards the end of the week or latest next week. And then going into next month, we expect some sort of respite to the tight liquidity we've seen in the market this month, given that we have about 300 billion coming in from OMO maturities and coupon payments.
But looking at the liquidity situation, yes, we've seen how tight it's been for a bit now. And in terms of OMO maturities and coupon payments, trying to understand what the rest of the top quarter will look like.
So I think between last week and now, we had about 145 billion coming from OMO maturities. There was an OMO auction last week, but there was no sale, possibly because investors are demanding higher yields. There hasn't been any OMO announcement so far this week. And then we also saw coupon payments on the 2028 of about 65 billion coming to the market. So, this liquidity has come in, but given the market has been tight, we haven't really seen the significance of it this week.
But looking at the currency, though, what's been the activity like at the INE window?
The INE window, I think we've seen the currency basically being devalued. We've seen it move to, I think, about 430 from 420 levels during the week, basically just going higher because the demand is there, but the supply is still very much low.
But in terms of an outlook, do you think we're still going to keep seeing the Naira being pressured more in the medium term?
Yes, we think the pressure is still going to continue, except something happens that would change the supply, which is not very clear to us right now.
All right, but I'm curious to know how you're interpreting the current inflationary environment and interest rates environment, looking at going down the line.
So we expect that inflation will still, last month's inflation came out at, I think, 19.64. We expect that next month we will see it cross 20 levels. And coming into the fixed income market, we think that rates are still going to go higher. The MPC will probably raise rates at the next MPC meeting. So we expect that rates would still keep going higher to try to, curb the rising inflation and bridge the gap between the rising inflation and real returns.
But still going back to the currency a little and looking at what we've seen play out with the FX reserves, what's your interpretation of activity there?
Sorry, can you say that again?
Your interpretation of activities with the FX reserves?
We expect that the FX reserve would continue to decline while the CBN still tries their best to protect the naira, bringing in, leaving the restrictions as they are and possibly even more tightening. But we expect that demand will still be there and the supply would continue to, go lower. Given that, we haven't announced any Eurobond issuance for the year.
All right, thank you so much for that assessment there, Ronke Akinyemi.